Hi guys, welcome back to the YouTube channel. So this video we're talking more about crypto. Literally just today, crypto's reached another all-time high, gone past the $100,000 mark, up to 104,000 I think it is at time of recording. So of course with this, with gains, it's important to factor in the tax side of the equation. People selling out now, you will have tax to pay if you're in the UK, which most of these viewers are. As everybody knows on the YouTube channel, you can't all just up sticks, move to Dubai. So what do you have to do for taxes in the UK? What taxes are payable? Today, we're giving a quick recap through it all. The first place to start would really be by talking about, well, what tax is going to be payable. You know, whether you're a crypto trader or investor, most people are investors, which means you pay capital gains tax. You only pay capital gains tax when you actually sell the asset. So when you physically sell the coin, that is, for tax purposes, it's a taxable event, it's a chargeable event, which means as soon as you do that, okay, that is an issue, that's something you need to consider for capital gains tax. I mentioned in other videos as well, when you switch between coins, that is actually still a chargeable event. So if you sell out of Solana into XRP, into LimeWire, into Bitcoin, each time you'd make that trade and you sell out and buy into another one, you can't roll over those gains and think you're going to pay taxes when you finally sell out of all of the crypto. Each of those is a chargeable event, and the gain that you've made will need to be tallied up, added on, and included in your self-assessment tax return. If you're trading as an individual, if you've got a crypto account in your limited company, that will just be included as part of your company's annual accounts, and you'll pay corporation tax on that, and in between 19 and 26.5% as an effective tax rate. So we know that every disposal counts as a taxable event, but of course, one option that a lot of investors have is you can basically borrow against the value of your crypto portfolio. And if you do this, when you actually borrow, you're just borrowing it against a secured amount, and that doesn't count as a disposal. So if you've got a large crypto portfolio at a high value, you can borrow against that. There's tons of different accounts that allow you to do this, for you to release some of that cash, and because that is a loan, that is not taxable. It's only when you physically sell the asset. But now you've sold the asset, what do you need to know when it comes to UK taxes? Assuming that you're trading through your own name, you will have to register for self-assessment if your gains are over £3,000 for the current tax year up until the 5th of April. So assuming that's the case, which a lot of people made a lot of money this cycle and there's certainly more to come, that will be the case. So you need to get registered with HMRC for self-assessment, and the deadline for doing this is the 5th of October, but 2025. So after the tax year's ended, you've got a couple of months to get yourself registered with HMRC, get yourself a UTR if you're not already filing a self-assessment, so that you're in their system, and then you've got until the 31st of January. So following the 5th of April 2025, you've got to the 31st of January 2026 to file your self-assessment tax return and pay the capital gains tax that's due on your crypto gains. How much tax will you actually pay on your crypto gains? Now, this depends on your other income mostly, because whether gains are taxed in your basic rate band or higher rate band, you've got two different rates that can apply to your crypto profits. The first one is the basic £50,270 total income. That's your personal allowance, your tax-free amount, plus your basic rate band. So if you've got, say, £20,000 of employed income, you can have about £30,000 of gains that would be taxed at 18%. And then if you're a higher rate taxpayer, so if you've got additional gains that on top of you've utilised that 50,270, or you've got a job or other income, dividends that push you into the higher rate band, naturally you'll pay tax at a flat 24%. So if you're a lower rate taxpayer and you've got a large gain, say 100,000, some of it will be taxed at 18%, some of it will be taxed at 24%. That's the main taxes that are going to apply to crypto. You've got your £3,000 annual exempt amount. So £3,000 of gains for the 24-25 tax year will be tax-free. But anything over and above that, 18% or 24% as soon as you sell. And remember, that's trading between coins as well. So don't think that you're just going to cash out of one into another, and that doesn't count, because HMRC are actively looking at this. They started last cycle when they can smell that there's tax revenue going awry. That's when they pounce on that sector, and this time will be no different. Especially when you've got kind of a lot of people investing through banks like Revolut. Okay, they are going to give all of that data to HMRC, because they have to, fundamentally. They want to have their banking license, they want their FCS, they want all of their government licenses, so they are going to be the first to comply and literally volunteer this information over to HMRC if they aren't already, because it's in their interest to. They need to be on the side of the government. So if you were thinking that, okay, you're not going to declare this, HMRC won't find out, They absolutely will in the vast majority of cases, and that's when you'll have fines and penalties for not coming forward to HMRC and paying the right tax on these gains. Actually calculating the amount of gain you've got can be complicated where you've purchased coins at different prices and you're not making a complete disposal. This is when you'll usually have to have some kind of averaging to look at, okay, the actual cost of the asset when you're making a partial disposal. You have to, with clients, we always recommend that you keep good quality records. Whether you've got some kind of Coinbase or some kind of ledger, that is actually going to help you see exactly what transactions you're looking at when you convert into fiat currency, pounds or dollars, so that you can actually calculate what did this cost you in pounds and pence, what did you sell it for in pounds and pence, because the difference between the two is the amount that you'll pay tax on. It's important to note that a lot of accountants aren't familiar with crypto still, exactly how that works, so make sure that if you are using an accountant to deal with your crypto taxes, you get one that is familiar with crypto tax. I'm a crypto investor myself. We work with quite a few crypto investors, so we're very well versed in the nuances in making sure that you do get the lowest possible tax bill and it's done correctly. If you are doing it yourself, if you've only got a small, modest gain, it's quite straightforward for you to do this yourself. Just calculate the gain, put it in right boxes on the software, on the online portal for HMRC, and it will give you the amount of tax you've got to pay, and you can pay that over. I'm sure a lot of people watching this probably haven't sold out yet. We've got a lot of clients, a lot of people in our industry, and they're holding on for the long run. If you have sold, do take into account what we've gone through in this video. If you haven't sold out yet and you're still holding on, you can pretty much disregard the need to register for self-assessment now unless you otherwise need to, because you only have to do that following the end of the tax year in which you made that disposal if it's over £3,000. But of course, guys, this is in the UK. And if you do truly want to pay less tax or pay no tax, look at moving somewhere else, whether that's when you make the gains, if you've got a large enough gain, if you've got a potential £1 million gain, realistically, the tax on that, about £200,000 just north. Could you use that, go overseas for 5 years if the gain accrued whilst you're a UK resident, and actually have a good life for the next 5 years at the expense of the taxman because you've moved overseas? Of course, people always dig in the comments, not everybody can move overseas. Well, if you can, go for it. If you can't, use the information from this video to make sure you stay compliant when it comes to selling your crypto. That's all for this week, guys. See you the same time next week. Bye for now.